This episode of the Old Dogs REI Network is brought to you by Mino Studio. Mino Studio is a pre- and post-production facility for all of your audio needs. Mino Studio's founder is an accredited audio engineer with top 40 and indie album credits. With over 30 years of music industry experience, Mino Studio can take your podcast from idea to reality. Contact Mino Studio at minostudio777@gmail.com for more information. That's Mino Studio spelled M-E-N-O, minostudio777@gmail.com.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, today we've got a fascinating guest, Marco Santarelli. Marco Santarelli is in the area of turnkey rental properties. And for those of you that know my story, that was the first 3 properties I purchased were turnkey properties. And so this is going to be a real interesting one for me as well as those listening. Marco's an investor, author, and founder of Norada Real Estate Investments, a nationwide provider of turnkey cash flow rental properties. He's purchased his first real estate investment at the age of 18 and successfully handled the entire rehab and property management of that property without ever taking a course or reading a book on the subject. Marco went on to get his real estate license and sell residential real estate for 3 years before pursuing other active business ventures. He eventually returned to real estate investing and founded Norada Real Estate Investments in 2003. Since then, Marco's organization has helped over 1,000 real estate investors create wealth and cash flow through real estate investing. He's also the host of a great podcast called the Passive Real Estate Investing Podcast. Well, welcome, Marco, and welcome to the Old Dogs REI Network.
Thank you, Bill. Thanks for having me on your show.
Oh, wow. We're looking forward to this, and I think you can provide a lot of great information for our listeners. Maybe I kind of gave an overview there, but maybe you can just kind of elaborate on how you got into real estate investing.
I guess I just knew that people were creating wealth through real estate. I didn't come from a wealthy family. You know, my parents actually worked multiple jobs to pay the bills. And as I looked around, the people that I saw that actually had wealth, not showing it off, but actually had wealth, and I knew they had wealth, had multiple properties, multi-units and single-family homes in the city I grew up in. And so, you know, it was obvious to me at an early age, probably around 14, 15, that real estate was really a way to become rich. And that's the way I defined it at the time. I wanted to be, you know, well off and rich. So when I turned 18, which is when I was able to qualify for financing, I, just jumped in. I picked up a townhome, renovated it. It was almost a complete gutting. but then I leased it, put a sign out on the yard, took applications. And looking back, it was almost textbook. And like you had mentioned a minute ago, I didn't take a course. I mean, there really weren't courses back then. There was no internet, so you couldn't get online videos and courses and whatnot. I mean, unless you knew something or went to the bookstore and bought a book, you really weren't learning anything about it. So anyway, long story short, I jumped in and took the bull by the horns and just did it. And then
if I can interrupt you here, 18 years old, I remember when I was 18, and I certainly didn't have enough in the bank to buy a property. I mean, that's pretty amazing.
Well, I don't remember exactly what the purchase price was. I'm going to guess it was $40,000 to $60,000. Now, keep in mind, this was about 28 years ago. 29 years ago. So, back then I had a good job. I had a part-time job that I worked almost full-time at, so I was able to save a down payment. And,
was this in California by any chance?
No, actually, it was in Calgary, Canada.
Okay, well, that explains it. Okay, I was going to say in California, even 28 years ago, that would have been real tough to find a property at that price.
Well, you kind of laugh. If you actually go back historically, you'll see that real estate prices were, much more affordable in both of those cities. No, I say city because California's not a city, but most of the markets in California. But if you look at real estate prices in Calgary today, there has been such a boom there, and this goes to the whole concept of real estate always being local. There's no such thing as a national real estate market. So prices in Calgary today are actually as expensive as they are in California, if not more expensive.
Wow, interesting.
Yeah, driven by an oil boom.
Wow.
and now a bust.
Oh my goodness. Yeah, is that like in southern Calgary where that hit?
Well, the property that I purchased was actually in an area called Dover, which was in northeast Calgary. Calgary's population today is over 1 million people, but Calgary is the sister city to Houston, Texas. So it is actually the oil capital of Canada, and a lot of corporate head offices for oil companies are based there. So that economy is heavily based on oil and gas. So when oil prices are down like they are now, the entire province and the country for that matter, but the entire province really suffers, just like the Houston market will, and Oklahoma and North Dakota.
Right. Wow, I didn't mean to interrupt your story. You were mentioning you got into real estate. I know that at a certain point you actually got your real estate license. Is that correct?
Yeah, so I thought the right direction at that point was to get my real estate license. So I got my real estate license, and then started chauffeuring people around in the backseat of my car, selling them homes, thinking that was my career, right? But I discovered after 2 or 3 years that's really not what I want to be doing. I think the real estate license was just more helpful in finding more property. So. But yeah, I mean, it was kind of the right next step. And anybody thinking about getting a real estate license, it is beneficial. So if you're thinking about it, just go ahead and get it, because it gives you access to the MLS and a lot of information that can be useful if you're working your local market. Right.
Great. Well, you obviously at some point decided, being a real estate agent wasn't necessarily what you wanted to do, and making the move into the turnkey area. Was that immediately a move, or did you start actually investing, or how did you kind of ease into the turnkey area?
Well, that came up many, many years later, because we're going from, what year was that? That was 1987, I believe, when I purchased that property. And so you have to kind of fast forward to 2003 and 2004 when I started investing heavily again, and that's when I started the company. But to kind of fast forward through a lot of in-between stuff and just kind of tell you how this all came to be, it was actually quite interesting. After being a co-founder of a dot-com business back in 1999-2000, which failed because the NASDAQ imploded, and that basically just dried up everybody's venture capital funding, including ours. So we had to wind the company down. After that, I took a couple years off and just, sat back to think about what I really want to do. In the process of doing that, real estate in most markets around the United States was on fire, especially in Florida and coastal California, Las Vegas, Phoenix, and, it was in the news every night. And in the middle of 2003, I got this email from Robert G. Allen. I don't know if you...
Oh, sure. No, no money down.
Exactly. He's a very famous author. He's probably authored close to 20 books, co-authored and authored. And, he's famous for Nothing Down and Creating Wealth and a few other books. So I got an email from his organization called the Enlightened Millionaire, EMI, Enlightened Millionaire Institute. They renamed it to Enlightened Wealth Institute. And I thought, well, geez, this is kind of interesting. They're having a free 3-day seminar, coming up in September. And I thought, well, I'm going to go. It's up in Orange, California. So I went to this event, and there were I'd say there's about 1,500 people in that ballroom. It was amazing how many people were there. And it was a very engaging event. They had an amazing speaker. The information was great. I remember being riveted to my seat, and so were, virtually everybody else in that room. And then I think it was after the first day or maybe halfway through the second day, they were offering these boot camps. And the boot camps started at $15,000 per head, per person. And it went up to $35,000.
Oh, gee.
And it was just amazing to me to see how many people were, going to the back of the room, credit cards in hand, purchasing these workshops and boot camps. And the kicker was they weren't local. They were spread out all over the country. So not only did you have to pay for the educational piece, but you had to pay for the accommodations and the flight to get out there. So it was a very expensive education. But, it's hard to put a price on education, if it's valuable. So I signed up and I started going to these boot camps, and I was learning some stuff. I was fortunate to have, known a bunch of stuff from my previous experience. But here's what kind of, here's where the light bulb went off. I was buying properties. In fact, between 2004 and 2005, those 2 years, I had acquired, it was either 82 or 84 units. And people were coming to me early on saying, hey, Marco, where did you find these properties? How did you negotiate them? How did you do your analysis? Can you find me some? And then the light bulb went off. I thought, geez, these people are educating themselves, but they're still not pulling the trigger, yet they still need help. And that's when I started doing what effectively we do today, and that is providing, what we call turnkey, cash flowing income properties or rental properties for investors. There's so much more to it today than what we had back then, but that's how it started.
Now, you mentioned 84 units that you had in 82 or 84, right around there?
It was 82 or 84 units over the course of over 2 years.
Now, those single family homes, or did you have multi-family as well?
It was a mix. I started with single families and then started purchasing 2-story flats, which some people call duplexes. They're just basically up-down duplexes.
Right.
And then I put a 4-plex and then a 6-plex in there, and then I found a 19-unit. And then for a period of time, I had a 40-unit apartment building.
Now, were you investing in Canada? Were you in California at that time, or?
I was living in California. I had one property in California. I had sold my Canadian holdings for tax reasons, and then I had started accumulating properties in Georgia, Florida, and Michigan.
Okay, so you're doing what a lot of turnkey people do, but they didn't. I mean, did they even have turnkey companies at that time?
Not really. There was really only one other company here located here in Southern California that was around for, probably 10 plus years before I came around. The gentleman who started that business actually was a professor at a local university, and so he was talking about real estate all the time, and it kind of became this business. I don't even think they called it turnkey back then. But he had a local following here in Southern California, and he did free presentations all along the coast, and that's how he was selling property. So what I was doing is somewhat similar, but I didn't do local presentations. I mean, it was just all on the phone and on online.
So you had to build your teams locally and so forth as you purchased or before you purchased?
So in the beginning, I was actually assembling my own teams. I was working with realtors, property managers, contractors to fix the properties, inspectors, etc. And so I had to basically assemble my own team and, fall on my face a few times and make mistakes and pay the cost of actually making those mistakes. But through those experiences, I learned how to refine the system so I could invest from my living room or my office here in California remotely and have a team that will work for me and I can trust and have everything done properly. So
Well, that's got to be especially challenging, especially working with contractors, I would imagine, from a distance.
yeah, contractors can be very difficult to work with. You have to have a very trusting relationship with them. You need to have some checks and balances in place to make sure that what they are claiming they're doing is actually done, and the monies you're spending are actually being spent on what is being renovated on the property. Now, keep in mind, I took a more active role back then, where I was involved in some of the rehab or renovations. I wasn't buying necessarily turnkey. However, I was able to find what I'll define as rent-ready properties off the MLS. So these are not necessarily in like new condition. And this is where some investors get confused. They think that a rent-ready property is a turnkey property, not by my definition. So you can find properties on the MLS that are good to go as they are. In fact, many of them already have tenants in place. So you can buy a cash flowing property from a real estate agent or for sale by owner or through a property management company. But that doesn't mean that it's what I'll call turnkey, which is newly renovated. It's in the right market, the right neighborhood. You've got the right management team in place, et cetera, et cetera. So to me, it's a step up.
Right. So I imagine in going through that experience, you learn definitely what turnkey should be and what it shouldn't be, right? In order to move forward and actually offer the service to other investors.
Yes, that's exactly what happened. It kind of morphed. My own personal experience morphed into a business.
Interesting. Wow. So now, are you still an investor? You have your own properties as well as the business that you're doing with investors?
Yeah, I'm still an investor. I'll always be an investor. I invest in different asset classes, but primarily real estate. In fact, I'm in escrow right now to close on some more property in Missouri, in Kansas City specifically. So I don't think that'll ever stop.
That's great. Are you what markets are you in for folks that want to, let's say, for example, go ahead and purchase a turnkey property?
Well, the United States is made up of over 400 metropolitan areas. In fact, you can almost count close to 500, and so there's a lot to choose from, and you can't be everywhere, obviously. So what we try and do is pick 6 to 10 markets at any given time. Right now it's about 11 that we focus on because the numbers make sense, the economy makes sense, the fundamentals are there, the housing market is healthy, the affordability ratio is in place. Jobs is at the heart of it. We like to look at something called a rent to value ratio. It's simply the gross monthly rent divided by the purchase price. So a $100,000 property renting for $1,000 a month will give you a 1% rent to value ratio. And to me, that's a very good number. That's the first metric I look at before I dig deeper. So when we're in markets where we see 0.9, 1%, 1.1%, I like that. That's a good starting point. And so to have all that criteria, that's what I think your listeners should look for. But to give you the names of those markets that we're in that meet that criteria, that would be Kansas City, Indianapolis, Birmingham, Alabama, Memphis, Tennessee, Jacksonville, Florida. Now, to a lesser degree, although still great markets, is Dallas, Houston, and San Antonio. They have become a little bit on the pricey side over the last year or two because there's just been such massive demand that it's been pushing property values up, and inventory has dropped. So, but those are 4 great markets as well. The far outskirts of Chicago, not in Cook County, but outside of that, is also attractive. There are markets in the Northeast that we're not in, but we could be. I'm just not a big fan of the Rust Belt. So anyway, long answer to your short question.
Right. Are you in Atlanta at all? I thought you were in Atlanta at one point.
Oh, I'm sorry. Yeah, Atlanta, Georgia. Yeah,
okay.
Atlanta is a massive market. There's somewhere around 7 million people in that entire metropolitan area. So there's lots of opportunity there in the right areas.
That's great. And do you deal strictly in single family? Is that correct?
Mostly single family. I mean, it's really just what we'll define as residential from a lending perspective. So that means 1 to 4 unit properties. So single family, duplex, fourplex, triplex.
Oh, okay. So you'll have some small multis occasionally.
Yeah, they're harder to come by. And usually nowadays, a lot of those are going to be new construction.
Ah, really? Wow.
Yeah.
And these markets, would you call them emerging markets per se? That that maybe some are promising. They look like they're on their way to becoming great investment areas, or do you look over a longer period of time?
I like to define markets differently. I like to call them either linear or cyclical markets. If you're in a linear market, then you have a smooth year over year average growth rate. And typically that's like in the 4 to 7% appreciation range. And, that's basically just keeping up with the real rate of inflation. And that's really what real estate should be doing. Coastal markets, parts of Florida, in the past Las Vegas and Phoenix, and to this day still they are somewhat cyclical. But these other markets are referred to as cyclical markets, and they are a little more erratic. They tend to appreciate much faster and sometimes in double-digit rates, and then they tend to drop quicker and faster, and sometimes in double digits. So, I don't like the cyclical markets. It's hard to time a market. If you're a gambler and you like to speculate and you want to chase after appreciation, and you can get into, a good appreciation wave, well, then you can get some good capital gains. But in doing that, you're trying to time the market as well to get out of that market so you can take that equity and move it elsewhere. I like the kind of the more sleepy markets like Kansas City, Indianapolis, and these other markets I mentioned that are far more linear in nature, where you can sleep well at night and you'll see the appreciation year over year average in that 4 to 7% range.
Yeah, I actually love those markets. So the great, just bought a property in Indianapolis and I have a few others there. It's a great place to be. Yeah. Can you define then what exactly is turnkey real estate investing?
It's one of those terms that gets kicked around a lot, and there's no formal industry definition. So the way I defined it long time ago, and a lot of people have kind of copied that definition, but they still use the term very loosely, and they kick it around as if it was just a rent-ready property. But for me and our organization, so our investment counselors, follow the exact same definition. It's essentially an investment property that's located in a good market, a market that is what I had defined before, something that has growth, it has jobs, positive migration or population growth, those types of things. So you're situated in a good market, then the property is located in a good neighborhood, and that's typically what I'll define as a B or A grade type of neighborhood. The property is either new or newly renovated. It has a qualified tenant in place. It's under professional property management. That's really the nuts and bolts of it.
Are you committed beyond the sale itself to the folks that purchase homes from you?
Our clients actually maintain communication with us in some cases long after the sale. They'll contact us from time to time with a question or a concern or something just off the wall, or maybe they're having a bit of a communication problem with their property manager and they're just asking us if this is, common or widespread. And then we just jump on the phone and just grease the wheels and figure out, okay, where was the ball dropped? So we're not heavily involved like we are, during the research phase and defining the markets and going through the transaction. But we're still involved. I mean, we'll always keep those lines of communication open, and we encourage clients to stay in touch with us. We may reach out to them from time to time.
Oh, that's great. Folks that know my story know that that's how I actually got started in real estate investing. Was I purchased 3 turnkey properties, and unfortunately I didn't do my due diligence as well as I should have, and ended up having some real difficult situations. But for those listening, what would you recommend? What are sort of the common mistakes that folks make when selecting a turnkey provider?
Mistakes in choosing a provider. One of the biggest things, and this is my pet peeve, In fact, I just had a staff meeting this morning. We have a meeting every Tuesday. We've had some nice compliments lately, via email and posts on forums about, some of our team members. And I thought that was very nice. So I shared it with the team. But when you boiled it down and you looked at what's the lowest common denominator, it always comes down to communication. Just having free-flowing, open, transparent communication with clients and being on their side, looking out for their best interests. What's most important to them and fulfilling those needs. So I'm not sure if I'm answering your question, but the mistake I think investors make is going down the road with a particular provider and realizing early on that the communication is not there. It's not quick. It's not responsive. It's not complete when there's questions being asked, or maybe they've just got a bad gut feeling about the conversation and there's something a little fishy going on. That's when you should really just back away or cut bait. And I think communication is huge. Other mistakes, I don't remember who said this. I think it was Ronald Reagan, trust but verify.
Right.
So, it's easy to make a property look better than what it is in terms of its condition or the numbers. And I think you need to take all that information. You can trust, the company that you're talking to, but you need to verify that information. We don't leave it to our clients to verify that information. I mean, they can do all the due diligence they want, but we're going to hold them by the hand and help them do some of it. So we will insist that they have home inspections done. And if that involves other professionals, other specialists to bring them in, whether it's for the roof or the HVAC or something else, then we'll help them do that too, because we want them to know exactly what they're buying and what the condition is. Photos, sometimes videos, but having, a good set of photos to show the condition of the property room by room.
And just for the people to know too, that actually before this interview, I had contacted some folks that had worked with Marco and got some great feedback. And I think it's just wise. That was one of the things that I didn't do when I purchased my properties, and I think I really should have done that. And that's I think a key vehicle that could prevent mistakes from happening. Conversely, looking at the success side of it too. Maybe you could recount a success story of somebody that invested with you and it worked out especially well in terms of the way that you folks have conducted business and worked with investors.
I'll give you kind of the worst horror story that we've ever had
Okay.
that turned out to be, going from a lemon to lemonade. This kind of takes everything you're asking to an extreme. We had a client that purchased a duplex through us from one of our providers that we had a good relationship with. They provided good product. And then about middle of last year, they started cutting corners and becoming a little cheaper, if you will, on what they were putting out. And so this started to slowly crop up with other people. And by the time this guy closed escrow, the writing was on the wall, but it was too late, because even though the inspection came through fine, there were hidden problems in this property. So to make a long story short, there were leaks in the foundation, leaks in the roof, caused the two tenants that were in there to complain, stop paying rent, and kind of delay their stay, and then eventually move out. So there were many months of lost rent on this property, and there were all these hidden costs in the form of repairs that needed to be done in different places, including appliances that were supposed to be in good working condition. They were refurbished, they weren't new, but even those had problems. So when you added it all up, I couldn't get blood out of a stone. I couldn't get much out of this particular provider. By the way, we've long since fired them after having multiple conversations. And we're very agnostic, so we're very quick to fire any company or any service provider that we work with. So we had fired this person. I tried to get some money out of them. I did get a little bit, but at the end of the day, I ended up having to stroke a check for somewhere around $13,000 out of our own company coffers to just make things right for this particular client. And I think the total costs to cure all the problems at that property came out to about $17,000.
Wow.
So, I wasn't going to leave him hanging. And by the way, this story is, like I said, the worst case scenario, and this rarely happens. It's very rare. But I wanted to just point this one out because we worked with him. We worked with the provider. We tried to get everything fixed up, and we did. And so as of today, that property is back to where it should have been in like new condition. And there are 2 new tenants that have signed leases that are being moved in, very soon. So this is a very recent story.
God, that's great. That's wonderful. It shows you stand by your product, which is excellent. We're name of our program's called the Old Dogs REI Network, and a lot of our folks are retired or are looking at retirement, and many of them are on fixed incomes, maybe have limited reserves. How would you advise somebody like that to get started in real estate investing, perhaps through turnkey properties?
Well, I'll give you a general answer because I'm not sure what kind of specifics you want. But first and foremost, educate yourself. That is such a critically important thing, whether it's through your podcast, my podcast, other podcasts, books, there's forums, there's just tons of information out there. So educating yourself is very, very important. Second piece of advice is, figure out what it is you're trying to achieve. There are a lot of people who are running a little scared or nervous today with their investment savings or their invested capital being in the stock market. Maybe they're in fixed income assets. I personally think that the way the equities market is today is very shaky and somewhat scary. So, how do you rearrange your portfolio so you can generate income and preserve your capital? Well, hard assets is one way to do that. So you can put that into precious metals. The only disadvantage with precious metals is that it doesn't generate income. It's a good store of wealth and preserves. It's a good hedge against inflation, but it doesn't generate income. So what else do you look at? My favorite investment, which is a hard asset, is real estate, because real estate not only preserves its value, but it generates income, can provide some tax benefits depending on someone's personal tax situation, but you've got that phantom write-off called depreciation where you don't even need to spend a penny to get it. It's just automatically given to you. And this is going to differ from person to person, of course, because you can only write that off against certain types of income. You have the potential for appreciation, which is, capital gains. If you do have leverage on your acquisitions, then you have amortization of the loan, which further builds your equity. And by the way, your tenant is paying for that, not you. If nothing else, if you've got a self-directed retirement account or you have the ability to acquire properties, let's just say you can't finance it. This is kind of worst case scenario, because the beautiful thing about real estate as an asset class is it allows you the ability to leverage up to 80% of that acquisition using other people's money, whether it's a bank or someone else. If you don't have the ability to leverage real estate, you still can purchase it all cash and get a rate of return that's 7, 8, 9% on your money, because that's what we refer to as a cap rate. And if you're buying your property all cash, that cap rate just happens to also be your cash on cash return. So as a bare minimum, you are preserving your capital in an inflation hedge investment and getting a 7, 8, 9% rate of return, cash on cash return on your funds. So that's my answer. It's a general answer. It's kind of hard to answer that question because when you're referring to individuals who are in their 50s or maybe even in their 60s, they're not the same type of investor as someone who's in their 20s and 30s that has a long investment horizon, and so they've got lots of time on their side. Anyway, that's my answer.
So what would be a range, for example, that somebody would need to get into a turnkey property then?
The properties that we typically deal with, to give you a broad range, go anywhere from $50,000 to $150,000. The bulk of them are probably 80 to 120. The bulk of them, and those are typically properties in B plus and A minus type of neighborhoods. Again, with that rent to value ratio, they're typically 1%.
Right.
So, I wouldn't necessarily call them expensive, quote unquote, properties, but they do provide good cash flow. They do provide a good rate of return, again, measured in cap rate or cash on cash return. A cap rate would be about 8%. A leveraged cash on cash return would be in the teens. It could be anywhere from 12 to 18 or more percent with 20% down. So everything to us comes back to the investor's investment goals. What are they trying to achieve? And then you take those investment goals and you start to define some investment criteria. Once you have those two things, then it's very easy. It's much easier to identify the markets, the neighborhoods, and the properties that will work for that particular individual.
So if I wanted to buy a property, let's say in Memphis, but I wanted to finance it, and let's say you have the property, is it my responsibility at that point to find a local bank that would fund that? Do you refer, or do you have finance sources for people that prefer to say to put the 20% down on a property?
Yeah, good question. I kind of skipped over that before. We have practically all the contacts and resources that an investor needs: lenders, inspectors, property managers, title companies, tax advisors, asset protection attorneys, virtually anything an investor needs to help them build their portfolio and become a solid, stabilized real estate investor with a good portfolio. We can provide those resources to them. And again, we have a list of people in each of those categories. So we maintain a very agnostic approach. So we're not going to say you have to work with this one particular lender, which is legal, by the way. We'll always give them a list of 2 to 4 names for each category.
Well, that's a real value right there. I mean, if somebody's going into a market, they've never even been to Memphis, let's say, for example, that really is a real added value, where you've got lenders that are lending on these kinds of properties already, that you can refer people to, and the fact that you're referring them probably doesn't hurt either. So I think that's a real benefit.
Yeah, that works.
That's great. I love it. Before we close out here, we do this little session called Wrap It Up. In this, I ask you a series of quick questions so that we can pick your brain a little bit about some resources that will help future investors and existing investors. So I'm going to go ahead and just begin to wrap it up here. What is your favorite real estate book?
There's a number of them, unfortunately, but I would say I'm going to give you 2.
Okay.
If someone is just getting started, or this is a foreign thing to them, I'm sure you've heard this 1,000 times, but I would start off with Rich Dad, Poor Dad, or one of the Rich Dad books. But Rich Dad, Poor Dad is a great book to set, your mental mindset properly. I don't know if that was a good sentence there, but it really just sets the mindset and puts you in the right frame of mind to understand income and expenses and why assets are what you want to put on your balance sheet and why the rich don't work for money.
Yeah, and just really redefining assets and many people's. So I think it's a great book. I do the same thing. Recommend that. Great.
Yeah, my other suggestion for a book would be The Millionaire Real Estate Investor by Gary Keller.
Great. How about your favorite business book?
There's a lot of great books out there, but I think a good one is The E-Myth by Michael Gerber, because it really categorizes people into different categories as to whether you're a technician and you're good with your hands in what you do, or whether you're more of a visionary, high-level person in directing stuff. So knowing yourself is a good place to start, because then you can select the right team to surround yourself with to accomplish your goals and whatever you want to do.
Great. How about most valuable website for real estate investing success?
Well, it depends what kind of resource you're looking for. I mean, obviously, our website is chock full of information, but some of the websites I use on a regular basis is Zillow. I'm not a fond person of their Zestimate and their estimates. I think they're off a lot, but there's a lot of good public information on there, and you can do a lot of research on there. Neighborhood Scout is also another good website I use on a regular basis.
Yeah, why don't you just tell people what that does?
Which one, Neighborhood Scout?
Yeah.
So what you can do with Neighborhood Scout is you can put in an address or a neighborhood, and it will pull up characteristic information and demographic information on any particular property or neighborhood around the United States. It's actually pretty detailed. It's a very good website. There's some information that you get for free, but if it's something you're going to use on a regular basis, you can purchase a subscription and you could look up any address and get all the information from their database.
How about favorite app?
Probably the mail app. It's the one I use the most. Email.
Okay, that's okay. That's all right. And our final question is, if again, this might not pertain to the turnkey area, but let's say somebody's just starting out. And I'll take you, for example. Here you are, you've built this great business and have investments and all this. Let's say one day, terrible scenario, but you lose everything, absolutely everything, except for $1,000 in the bank. And given what you know, how would you use that $1,000 to get back and to rebuild your real estate investing business?
1,000 is a really hard number because it's really hard to do anything with real property with $1,000. And I don't recommend people invest in a REIT, like a real estate investment trust, because you're now investing in paper assets, not hard assets or, real assets. So if that number was 20,000, I would have a different answer for you. But with 1,000, what I would do is spend that 1,000 as wisely as you can to gather as much knowledge and education as you could possibly gain, whether through books or mentorships or just working with someone who can guide and mentor you, and whether they do it for you gratis or you pay them that $1,000. But just educate yourself to the point where you can actually start doing something for yourself. And I know that sounds like it might be a monumental task, but it's really hard to launch a rocket off the ground with $1,000.
Sure. Well, maybe you tap into your Robert G. Allen no money down experience, and
yeah. Well, that's a good point actually. Bill, you could take that $1,000 and apply it to marketing for distressed sellers. And then you can negotiate something with a distressed seller, whether it's a subject to, where you take over their existing financing and you rent that property out to someone. You don't necessarily need money to get started. If you put in the time, the sweat equity, you have the active side of the equation, if you will. You can still find deals. It's just going to be doing it differently.
That's great. Well, gosh, I could go for probably another hour here. We got about over 40 minutes, but I'll tell you, this is great information, and I'm hoping we can maybe have you back in the future to maybe zero in on some of these areas we touched on, if you're up for that.
Sure.
In the meantime, how can folks get a hold of you and find out about your company?
Well, two websites. I guess the property website with the blog that's chock full of information can be found at noradarealestate.com. Norada is N like Nancy, Norada, Norada Real Estate. And then the podcast website is pretty easy to remember. It's passiverealestateinvesting.com. And they both link to each other. So from one, you can go to the other.
Oh, that's great. That's great. I just want to let everybody know that all the information that he's given, this contact information, websites, and so forth, as well as some of the references to books and so forth, will be on our show notes. So you can check that out at our at olddogsreinetwork.com, and we'll have that up there for you, as well as the broadcast as well. have had this has been just some great information. And this is an area that I really believe that is a good place for people to start off and get involved in real estate investing. And for those that are just too busy to really put in the time, it may be the primary way that they invest. And I really like how your philosophy and how you stand behind the folks that you'd work with individually. So we thank you for that. Well, we are about to close off here. As many people know that we are the Old Dogs REI Network, and none of our guests get off the line before they give us their best old hound dog howl. Now, maybe up in Canada, you might have had some dogs. I don't know about down here in Orange County, Southern California, but I'll go ahead and leave this to you to see if you can close us out with as good a hound dog howl as you can come up with.
Bill, I don't know if this is cheating, and you may laugh, but does this count?
Okay, that sounded like a pig being slaughtered. Wait a minute. That was really, really rough. I lived in Haiti for 11 years, and there was a butcher right down the street from us, and I used to hear that sound, unfortunately, on a pretty regular basis. I'm just kidding.
I cheated. I went to YouTube. I did a hound dog howl search. And that's actually a real dog.
Wow. I don't know if we're going to let you off that early. What do you think, listeners? Do you think we should let them use that? Or
I can give you a howl. Ow, ow, ow.
All right. That was pretty good, Marco. That's great.
I practiced all weekend for that. You know that,
right? And this is why you decided to come up with a recording here.
Yeah, exactly.
Oh, well, thank you so much. It's been just a real pleasure to have you on, Marco. And those of you that are listening here, check out his website and blogs and so forth. Marco is a great resource for information, not just on turnkey investing, but on just real estate investing and purchasing homes, and you name it. He is an invaluable resource, and he's got a great podcast. So I would really highly recommend that you check him out and learn more about real estate investing, especially on the turnkey side of things.
Thank you so much, Bill. I've really enjoyed being on your show.
Well, we've loved having you, Marco, and we'll stay in touch. Let's see if we can get you back a little bit later down the road here to elaborate on some of the things that we talked about.
It'd be my pleasure. Thank you.
Well, great. Well, thank you. And Old Dog listeners, thank you for tuning in and taking the time to listen today. And just remember, just be encouraged and keep moving forward, because real estate investing is something that is not that difficult. Companies like Marco make it even more obtainable. So thanks, and God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.